Hi, and welcome back to That's Entertainment, the weekly entertainment show where we look at all the interesting news from last week, this week. AMC Theaters were in the news again this week when the cinema chain unveiled their Q4 results. Unfortunately, the news wasn't great. The headline in Variety reading, AMC's quarterly earnings, losses widen, revenues fall despite Avatar 2 box office success. According to the report, despite the box office success of the film Avatar: Way of Water, revenues at the world's largest cinema chain fell by 15% in the fourth quarter, topping out at $990 million. This was down from $1.17 billion in the year prior. AMC posted a net loss of $287 million, a steeper shortfall than the $134 million in losses it recorded a year ago. The company also lost around 26 cents per share compared to a loss of 13 cents in the same quarter in 2021. The worrying numbers weren't confined to AMC's North American operations. Global attendance, which has been negatively impacted by a dearth of major studio movies and shifting consumer habits as more movie fans turn to streaming services, continued to fall. AMC said it hosted 49.5 million guests, down from 60 million customers it fielded in the year-ago period. AMC's charismatic CEO Adam Aron acknowledged the problems the company has been facing, but offered a more positive outlook, telling investors, "By no means are we out of the woods yet, but clearly we have been and are now making great progress, having continued on a multi-year glide path to recovery, in stark contrast to others in our industry who have faltered. AMC's entertainment has increased our liquidity profile and strengthened our balance sheet through equity capital raising, debt refinancing, debt exchanges, and repurchases." AMC have certainly led the way into looking for ways to attract revenue from sources other than traditional reliance on sales of tickets and concessions. It's bought a stake in a gold and silver mine, partnered with Zoom to allow companies to book meeting spaces in its venues, and announced this week that it's launching a new line of microwave and ready-to-eat popcorn products that will be available at Walmart. As Deadline Hollywood reported, the popcorn will make a timely debut, going on sale over the upcoming Oscar weekend, expanding to more than 2,600 Walmart stores and Walmart.com in the weeks following. The canny CEO also turned to Twitter to further raise the profile of the AMC-branded popcorn amongst his 290K plus followers, making them aware of the upcoming product launch. Adam Aron, who regularly uses the social media platform to engage with the loyal followers, many of whom are also shareholders in the company. In recent weeks, he generated substantial coverage, promoting the series of preview screenings of Marvel's Ant-Man the Wasp: Quantumania that he hosted at selected AMC cinemas, giving his fans the opportunity to not only hear him speak as he introduced the film, but also get a photo with him subsequently. The support of those many small shareholders that Aron has been courting via Twitter will be crucial at a very significant shareholders meeting coming up shortly, as highlighted by the CEO's comments at the recent Q4 results presentation. As we've been saying for a long time, the industry-wide box office will not return to pre-pandemic norms before 2024 or 2025 at the earliest. Therefore, this active management of our capital structure is vital for AMC to ultimately both survive the pandemic and to thrive over the long haul. Accordingly, we continue to urge our shareholders to vote yes, voting for the recommended proposals at the March 14th special meeting of shareholders, which gives AMC the best chance to generate value for all our shareholders in the months and years to come. Basically, the company debt is a big drag, and Aron needs shareholder permission to issue new shares to sell them to pay it down. He thought he'd found a way out and around last year by creating new preferred equity units called APEs for short. He sold some, but not enough or fast enough to make a difference before the APE price fell. His plan is to decommission the APEs in a conversion with a reverse stock split. AMC shareholders will vote at a special stockholders meeting on March 14th on two proposals. One calls for an increase in the authorized common shares from 524 to 550 million, and the second for a 10-for-1 reverse stock split. If both pass, holders can convert their APEs into common shares. The CEO also used coverage of those Q4 results to speak up for AMC's decision to trial dynamic ticketing pricing in select venues, with seat prices based on their sightlines to the screen. We are in inflationary times, and inflationary times cause costs to rise. Under the pre-sightline structure of the industry, if we wanted to raise the price in a theater, the only choice we had was to raise the price on all seats. With Sightline, if we felt the need to raise prices, we might only do it in the most popular seats in the auditorium and actually hold the line or not raise prices on other seats. So it's a way of increasing the price now, but preventing a price increase later on. I'm looking at heat maps, meaning what seats are booked for a particular movie and the fact that nobody sits in row 1. It could be opening night for Star Wars, rows 3 to 18 are booked solid, row 1 is empty. There's a possibility here that by discounting the price upfront, we may be able to expand the movie-going market to more price-sensitive consumers. Well, we wish Adam Aaron all the best in the upcoming months. I think there's some very exciting months ahead, certainly with the slates beginning to hot up again. And AMC does seem to be in a position of being the innovator within the market, trying a lot of different things and also being quite vocal. If you haven't already given Adam's Twitter handle a follow, I would recommend it. It's a good way of staying on top of the industry. And it's great to see a CEO being quite so open about the future as well in terms of what their plans are. That's all for this week. Feel free to like, subscribe, and share a question below. Thank you very much.